Hey, everybody. Welcome to the morning market briefing. It's Monday, July 27th, 2026. Hope you're doing well out there. Ben, Tom, how's the weekend?
It's good.
It's good to be back. We're
Good to be
in the
back.
saddle.
The
Time
boy-
to grind.
Time to grind. Big week ahead, busy week, and we're seeing big movements with the chip stocks again.
Oh, I thought you were.
Shout out to Hicks.
Shout out to Hicks.
Chip stocks rocketing as NVIDIA is now backing a $500 billion OpenAI data center.
Yeah, the circular financing is back. This one's almost takes the cake. SoftBank is building. So SoftBank is the Japanese company led by Masayoshi's son, and they are building a $500 billion data center project in southern Ohio. And OpenAI is going to use it. So that basically OpenAI is going to lease it from SoftBank. And so SoftBank's trying to finance this, and they're going to financial people to lend them money. And these financial people say, we don't trust that you're going to pay us back because we don't trust that OpenAI is actually going to fulfill the terms of its lease. So NVIDIA's saying, hey, we'll come in, we'll backstop the lease from OpenAI. It's almost like a kid just graduated from college, has a great degree, and then is trying to get an apartment, and the rich uncle co-signs the lease. But also NVIDIA kind of needs OpenAI to continue to buy its chips. So it's almost like this rich uncle
did a 1031 exchange.
Yeah, has his prescriptions picked up and dropped off by his nephew, and so has some need for his nephew for that. So it's very interesting from that perspective. There's a lot else there too. The U.S. government and a subsidiary of SoftBank called SoftBank Energy are developing like $33 billion of natural gas powered plants. And it's kind of a Kevin O'Leary deal. Like they get
the royalty.
They get a royalty for the first $33 billion until SoftBank is paid off, and then the U.S. government keeps 90% of the revenue from then on. So it all goes. It's one of Lutnick's biggest deals that he's worked on as Secretary of Commerce. So it's very interesting. The first phase should be finished in 2028, but it's just 800 megawatts. So we've got still 9.2 gigawatts to go from there. Each gigawatt, I think, probably runs in the order of about $20 billion, $10 to $20 billion. So this is the biggest data center project that's been announced, although Elon Musk wants to have thousands of gigawatts being shot up into space every year in a few years. So we'll see what happens with that.
I'd like him to do that. CXMT up 450%. It's a Chinese stock market debut.
Yeah, it just IPO'd. So this is the one that Apple is looking at in terms of supplying it with memory chips, because they think that Micron is just, getting way too much money for its chips. It's kind of a conglomerate of, not conglomerate, an oligopoly of Micron, SK Hynix, and Samsung, and they're charging a lot of money for these memory chips. So Apple's looking elsewhere, and one of these companies that they're looking at is CXMT, and they were up over five times on their IPO. So I think SpaceX went up, 15-20% the day of its IPO.
Cool, 450.
Kind of about over five times its IPO price. So we'll see how that happens. See how that evolves going forward. Again, Apple is famous as one who can quickly pull the rug underneath any of its suppliers. So they've done it with Micron. Maybe they do it with CXMT too.
Yeah, something to keep an eye on. On the war front, U.S. pausing Iranian strikes, giving some room for some space for diplomacy, but also concerns floating about that weaponry stockpiles may be quite diminished, and that might be why we're actually doing this. But Iran not really changing their tone, remaining quite defiant, saying we have never allowed and will never allow the United States to determine the timing of the war, which is interesting because I Pretty sure we started it.
Mm-hmm.
I would say that in war, I would say the two greatest pieces of timing, only one of which has occurred so far, was 100% dictated by the United States, and that was the start.
I mean, we knew the snap count, which is that's the advantage, right?
Yeah, it's it's having a positive effect on markets this morning. I do wonder why the markets are rallying so strongly and why oil's down so much. Part of me wonders if the markets are buying this idea that the U.S. is kind of out of ammo and therefore cannot continue the war, and therefore oil will go down.
Yeah.
So I wonder if that's versus, just trading on any Trump tweet, because an 8% down move. I mean, we've seen some taco movements on Trump always chickens out in the market, but this
seems like a very powerful taco move.
Yeah, especially because we've seen pauses before and it doesn't really do anything. So oil down 8%, stocks up a decent amount this morning, gold up. People do wonder why gold goes up on days like this, and I very much think that it's you're kind of missing the point with gold. The point with gold is, what is the next move from the Fed? And if the next move of the Fed is to become more dovish, then gold's going to go up. If the next move from the Fed is going to be more hawkish, then gold's going to go down. So that's my opinion on gold. But rates coming down just a little bit, but still elevated, Tom.
Yeah, they're coming down. We've got the Fed decision coming up. I struggle to understand what is driving the idea that there's a 33% chance we're going to get a hike this week. And even if we did, what the net effect would be, because we've got the result of all of this is we've got a very flat yield curve. I mean, the spreads between, 5s, 10s, 10s, 30s are all pretty flat. In fact, the biggest, most severe change is between the overnight rate and the 2-year, which is almost 60 basis points. So the overnight rate 375, 2-year is at a 432. So you raise the overnight rate, and so what you do is you get a flatter yield curve. I mean, you could argue that the functional result of all of this is that we're in a much more restrictive environment, and we hit basically the highest level since the year 2000 on positive real rates at over 3%. At different parts of the curve, which is, just a 5-alarm bell that you need to be buying treasuries, bonds, anything with a spread, because you just don't see those, and you haven't seen those in the modern era. Really since the internet began, you have not seen positive real rates over inflation, and inflation is net coming down. The jobs market is not getting better, and so those would be the two pieces that would, that's the dual mandate. If they wanted to raise rates to get inflation down, well, inflation's already coming down. And then you want to cut rates to stimulate the jobs market. Well, the job market isn't bad or good. It's pretty neutral. We've been stuck in neutral for months now.
Years.
Even if you argue that the jobs data is bad and the jobs market is bad, that would necessitate a cut and not a hike. But people are so over-indexed the idea that we need to raise interest rates, and I just don't think we do. In fact, they're so restrictive that positive real rates are reaching new levels.
It's interesting. So I was just looking at the poly market and Kalshi odds for this next rate decision, and there is they say a 20% chance of a rate hike. And I do wonder, as we're looking about what the market is expecting, would you is there something going on with Fed fund futures that would influence things more than just, because it's always translated as this is what the market's betting on. But
those actually betting on the market,
right,
are saying much lower chance of a hike.
Yeah, and I'm wondering if I was a hedge fund, I would be buying Fed funds futures because clearly they're cheaper than they should be, and also buying the 20% that says, and is basically making the spread on that 13%.
Yeah.
I don't know. It's something to look into.
It's curious because it doesn't jibe with reality.
Mm-hmm.
It really doesn't. I have a Kalshi bet that I put on months ago that there would be at least one hike this year, and I am down on that. But I still don't think that that's a losing bet. I think it's more
one cut.
Yeah, sorry, one cut.
Yep.
I still think that's a much higher probability than people are giving it credit for. But
even more surprising than the 33% chance of a hike in this meeting is the over 100% chance of a hike by September.
Yeah.
Yeah.
That's
What do they see that we don't see, or that Kevin Warsh is not indicating? I mean, if anything, we've seen more Fed speakers come out and say, now that this data is going the direction of lower inflation, and honestly, higher real rates should beget lower inflation, because, I mean, it's oppressive. The rate environment is oppressive, as oppressive as it's been since I was in high school, a freshman in high school.
And again, I talked about this point in the market memo. I talked about it on the call on Friday. But I mean, think of how oppressive it is on home buying, but then also think about how oppressive it is on the federal government and being able to have any fiscal stimulus whatsoever. Because you got, if you're paying now, we're not all there yet, but assuming we're at 4% weighted across the curve, which I don't think we are yet, but just assuming we are. That's $1.6 trillion of interest that we're spending that we could be spending on other uses.
Yeah, it's just I don't know. And that's the thing, is that it if you raise the short end rate, all you're going to do is continue to have people buy short treasuries and not buy the long ones. It actually will have the opposite effect.
Yeah.
But if you cut the front end, people will move out of money market. And they will look at the 10-year and be like, man, 4.5% for 10 years is a lot. And 5.15 for 20 years is really a lot.
Because I don't think people are really scared of 8-9% inflation. I mean, I don't think
what scenario would cause that? COVID didn't. I mean, COVID caused it briefly, but that was really more
stimulus.
Immigration.
People stimulus.
Based on the Fed's own study. Look it up.
We're getting people in the mail.
Yeah. Well, yeah. We're flying them in. Airmail.
Economically this week, quite a bit of data coming through. In addition to the Fed, we'll also hear from Bank of England, Bank of Japan. We'll get Q2 GDP revision for the U.S. 7-year bond auction going off. But Ben, lots of earnings. What's top of mind for you as you try to grapple your way through the week ahead?
Big ones are on Wednesday evening, Microsoft and Meta. Starbucks also reports. And then Thursday evening, we have Apple and Amazon. So 4 of the Mag 7 on Wednesday and Thursday evening. We obviously had Tesla last week. We have Google last week. NVIDIA has a different reporting cycle. So it'll be a very interesting week. Last week, I think the big themes were AI is kind of up and down, and people don't really know where it's going. But the wheels on the train are going round and round, and it's picking up steam. So I'm curious. I mean, we have on that line of thinking, we have Vulcan Materials on Wednesday morning. We have MasterCard, Martin Marietta, CRH, Valero, things like that.
Thinking specifically of the Mag 7, you mentioned 4 reporting on Wednesday and Thursday. When you think through those, think Microsoft, Meta, think Apple, Amazon, which, if you had to pick one winner and one loser, at least in terms of stock price reaction to this quarter, who's the winner, who's the loser of those 4?
I think this is a hot take, but I think Meta has the potential to be the big winner, because I think that Zuckerberg can come out and say, we're taking a quarter off spending, and I think that the stock would rip. And I think that he understands ROI actually better than the Google people, and I think expectations are lower after Google reported. So I like Meta there as the winner. As the loser, it might be Amazon. I think I really like Amazon, and I'm not going to sell it, and we're overweight. But I do wonder if it's kind of the hot stock among Wall Street, and I just wonder if it's going to have a little bit of a mix up. Apple's also interesting too. Upgrade rates for phones have been down,
really down,
but people will probably be looking to the September quarter, which is the big one with the new updates and everything. So they might be okay.
Cool, good stuff. Tom, anything else?
No. It's going to be an interesting week. I think the CapEx thing is going to be huge. I think that there's all this chatter, and I don't really know how to track it down, that there's more than $1 trillion of shadow debt associated with AI. There's a lot of talk about that. I don't know that we have really been able to pinpoint exactly.
Yeah, I need
whether
somebody
that's true or not.
to go full whiteboard on that and show it to me.
Somebody call Nick Shirley and see if we
Yeah.
can track down
Yeah.
this shadow thing. I think it's. I mean, there's a big wet blanket around this market, but it flip flops of who it's on every day, and so it's very difficult to keep track of exactly what the narrative is because one day the wet blanket's on AI, the next day it's on oil, the next day it's on healthcare companies, and depending on which ones you own and how much of your performance is so varied. I mean, there are days where we're up.
Monday and Tuesday were miserable from us on a relative return basis last week, and then I think by the end of the week we made it all up.
Yeah, Thursday and Friday were unbelievable.
Yep.
It's totally has to do with the shifting wet blanket. So I expect volatility, but I would say if you're looking at your account and wondering why we're either up 50 or down 50 versus the market, just do a quick Google of who's got the wet blanket today.
Yeah. We should start one of those Twitter bot accounts.
The wet blanket
discloses
index.
where the wet blanket is on every given day.
So somebody put it together. Somebody AI that.
Yeah. All right. We'll wrap it up there. Y'all have a great day. Talk to you soon.